Now we are moving ahead to our next panel, which explores how MSMEs can not only thrive locally but also take their strength to a global stage. The theme is breaking borders, boosting exports, turning local strengths into global successes for MSMEs. Please join me in welcoming our distinguished panel. Mr. Rohan Sharma, Executive Director at Easebuzz as a moderator. And now our panelist, Mr. Gaurav Saboo, EVP at Axis Bank. Mr. Hitesh Sethi, Senior Director at Bradstreet. Mr. Anand Balaji, CEO and co-founder at Xflow. Ms. Praachi Dharani, CEO and co-founder at PayGlocal. Ms. Mrinalini Goyal, Senior VP, Investments at Guild Capital. Mr. Rajiv Nikumb, co-founder and CEO at Blueno. Requesting Mr. Rohit Sharma to kindly begin the session, Mr. Rohan Sharma. And I would request our one more panelist, Mr. Satya Pratha, to join on the stage, please. All our panelists are here. I would request Mr. Rohan Sharma to kindly begin the session.
Thank you. Good evening, everyone, and a warm welcome to this exciting panel on breaking borders, boosting exports, and turning local strength into global success for MSMEs. India's 65 million MSMEs today contribute to 30% of the GDP and almost half of the global exports. Truly the backbone of the India's economic story. Yet, as we all know, the real opportunity lies in scaling this beyond our borders and being a true global superpower. On this topic, I'm truly delighted to be joined by this amazing panel of experts, of key opinion makers, across various fields such as banking, consulting, advisory, investment, fintech, and generally MSME growth. Together we will explore what it takes to turn India's MSME energy into a world-class export engine. So starting with you, Hitesh, okay, in this world of over-information, too much information, how can MSMEs actually leverage data to identify the promising export markets and make informed entry decisions?
Yeah, thank you so much. So very simple, three things which we do. I think the first part is data. I think we look at data very transactionally. Can we look at it over a long trend? Can we understand how the supply chain is shifting, how the trends are changing? That's the first part. I think it's very critical, even now more topical, as external pressures are changing and localizing the supply chain. The second is insights. Today, what is value for me? Is that really value for my buyer also? And how can I know that? Can I actually, before making an investment decision, understand, interact, and where are these places where the transactions happen? So the insight part is the I. Third, a large part of our discovery is now online, and I think technology plays an important role. So before I actually put myself into that spectrum, make myself available, am I digitally ready? If the discovery is happening online, my capability, my competence, my strengths, are they visible? So very simple, these three things, if we do it efficiently, I think that will enable you to focus on the right areas and also make a choice of the right markets.
I think quite nice and concise answer on that. Touching on the part of the technology and digitization, generally innovation. Satya, so I'd like to pick your brains on how can innovation bridge the gap between the Indian MSMEs and the global customers?
Thank you for the opportunity. Well, you see, trade, finance as such is a paper-intensive industry where there is a lot of movement of documents. Where technology comes in is better ease of flow of documents and faster credit of money to our exporters, since this is a panel on exports. banks are exploring and leveraging platforms like blockchain and other mediums wherein they are digitally connected, integrated with EDPMS for the shipping bills and let's say export advances. This is where banks can come and play into a picture wherein they can give exporters basically a digital platform to concentrate more on business rather than the regulatory compliances, as well as faster credit. Because you also have to think that for MSME exporters, they have the major risk of their buyers as well. So that's where Dun and Bradstreet report helps, whether the financial risk of the buyer is basically sound or not, whether they will receive the payments or not. So there are the technological innovations are absolutely mandatory where if you want to boost exports, wherein banks have to play a major role in empowering the exporters basically to achieve faster credit for their exports and also reduce their time on regulatory compliances so that they can uh, basically increase the ease of business.
Understood. I think I would summarize that maybe if I have to summarize it in a word, maybe the word would be experience. To enrich the experience of the buyers and also the MSMEs. And Praachi, as an expert in this matter, how important, let's say, seamless checkout as an experience booster in building trust with the international buyers of the Indian MSMEs.
Yeah, thank you, Rohan. Look, any exporter, MSME who wants to, start shipping goods internationally or start attracting customers from international segment, today, when they are trying to do from an online perspective, they face challenges in 3 steps, right? One is first listing their products, then at the time of transaction, and the third thing is post the transaction is completed, right? Today, we are seeing on our platform at PayGlocal, once the merchants start listing their products for international customers, they have customers more than 120 countries transacting on their platform. And there is a very realistic case study which says that if you are going to list the product in the currency of the buyer, there is a very high probability of them choosing your product. It is technologically, there are not many products available for these MSMEs to actually list their products in so many currencies and then, do the entire bookkeeping and all of that once the transaction is completed. So that's like the first leg of, thing to be resolved. The second thing is at the time of transaction. All of us know that from a RBI regulation perspective, we are a two-factor mandated market for domestic transactions. All our transactions go through OTP. That's not the scenario for international markets, right? And if we are going to force the same two-factor authentication of India market to global, the success rates come down very, very significantly, right? And hence, how do you solve for those things at the time of payment gateway checkout? If you have passed that hurdle, then comes the third things. Once the transactions are done, the exporters also need FIRCs and EDPMS knockoff and all of them to comply with the compliances. So I think the payment gateway product has to solve for everything and not only one thing. And I think that's what we are doing in partnership with Easebuzz.
Thanks, Prachi. I think you touched upon the requirement and need of products and digitization. So, Gaurav, as a bank, how are bank tailoring their products for the requirement of MSMEs, and how are they generally, making them go digital first, or increasing the adoption of digital products in this space?
So good evening, everyone. I'm aware we are standing between the most exciting part, the awards, and drinks and dinner. So we're going to be crisp. And thanks to the Easebuzz team for having us, very deep, long partnership we have with Easebuzz. I think so what, we're kind of looking at, and I'm going to add on to what Sunil mentioned, is that if you look at MSMEs and someone who are kind of looking at the cross-border trade, one is how can we, partnering with fintechs, provide immediate liquidity. The second is how can we reduce counterparty risk. Um, and also, how can compliances, what Praachi touched upon, can be done in a digital, faster, lower TAT, perspective. There is also an element of, currency risk, and how do you kind of, mitigate that to a very large extent. So I think these are the broad areas where banks are kind of looking to add value to the segment. And from a digital perspective, I think today you have, of course, end-to-end digital portals. Some of them within the banking system, or they become sharper with fintech partnerships. But apart from those portals, there are also now deep API integration. So how can an MSME not move away from a single window, TSP provider or a SaaS provider, and yet be able to complete the cycle end to end in the most compliant manner? One of the other things that is also important is how can there be frictionless digital experience. So one of the things that we are kind of working on a lot is trying to see how KYC can be paperless, how there can be nil or zero documentation, physical, that is needed, so that the impact or the reach can go deeper into Bharat, from a buzzing Bharat perspective. Um, One of the other things, and I think, a lot of places we are co-creating things with fintechs, but we're also kind of competing with, is to create our own platforms which are holistic. So, banks have their own neo-banking platforms, where from order to payment to recon to reporting or compliance, can be done through APIs. Today, banks are, through their APIs, connecting with ERP systems, fintech partners, e-com platforms, shipping portal, and I think connecting those dots is how the enablement, will be furthered to kind of help MSMEs grow. Yeah.
Thanks, Gaurav, for that. Talking about capital, Mrinalini, as a global investor, especially in the consumer segment, what do you think makes the Indian MSMEs attractive to the general global investors group, especially when you look at the export-driven sectors?
Yeah, Rohan. So I think a couple of reasons why investors and global investors such as Guild, right, are very excited about export-focused MSMEs. One, I would say, is the China Plus One tailwind, right? The dual sourcing, I think, is very real, and it's something that we're actually seeing playing out. India has a resilient supply chain, right? Especially if you look into other factors, right? English speaking, you see logistics infrastructures developing nicely. I think this is a real opportunity for Indian MSMEs to pick up, right? Second, I would say is if you look at like the cost quality curve, right, for MSMEs, I feel like India is getting there now, right? Earlier we were either not competitive on cost or quality was not there. Now we're able to deliver that value globally. And I think that's very, very important, right? Because now suddenly you're extremely competitive for being a supplier. And third, I would say is more the digital readiness unlock that's happening now, right? Like you said, MSMEs contribute about half of exports, but I would say like maybe 5 to 10% are actually globally integrated, right? And I see that unlock happening now in the next few years, right? With the kind of measures that we've been talking about now, and that digitization will create an EBITDA unlock, right? So I think these are the kind of 3 top reasons why we're very excited to look at export-driven MSMEs.
Thanks, Mrinalini, for that insight. Moving to the other C, the scary C of compliance. Rajiv, so compliance is often seen as a barrier. How can we simplify it for MSMEs without compromising on standards, on qualities and speed?
Thanks, Rohan. Good evening, everybody. So if you look at compliance, the way the whole trade process has evolved, that there is a core business, there is a non-core business. So the compliance has evolved as a non-core business. And primarily, if you look at the MSME side, they are really great at their operations. But when it comes to compliance, they struggle a lot. It's a burdensome. The primary reason is it's very fragmented, manual. Just to give you a glimpse, like for every shipment, you need to prepare 50 sheets of documents, which should be exchanged up to 30 stakeholders, domestically and internationally. So looking at this kind of fragmentation, it is really, really a burdensome for the MSMEs, exporters and importers both. To tackle it, if you look at, there is three aspects. One is like preparation of this 50 sheets of documents. Then the accuracy, because any inaccuracy leads to delay. It will cost you money, and it's like a vicious cycle. If you delayed here, you will pay to custom, then you'll further pay to your users or your buyers. Then second is that you need to share with multiple stakeholders. And then you will be following up with again and again and again, then again it's costing you time. So to solve it, one principle would be that whatever the compliance need is there, it should be simplified in an automated workflow. And this automated intelligent workflow should be embedded into the trade platforms and other digital platforms. Like Praachi has clearly mentioned that related to payment, ED payments, ID payments compliances, that should be built inside the platform itself. So it is just another example of like, you can say classic case of embedded finance, there should be embedded compliance. Secondly is like accuracy. It will also ensure accuracy. Next aspect is that how it is going to be shared. So I would try to break it down into two parts, that you can share this document domestically. So you need to have a proper interoperability where I think banks and other fintech partners are like quite opening up in this space, where API-based interoperability is a kind of evolving, which will further simplify these things. The other aspects is when it comes to global aspects, there we need to adopt the international standard of regulations, especially under UNCITRAL, United Nations Commission of International Trade Laws. And there's a lot of model laws were there under this. I'm going to name one of them. It's like model law for sharing of electronic records. That is already, it will standardize the document what you are preparing here. So and you can easily share, and that is easily accepted in the other geographies as well. So this will reduce your duplication of the work, and you will be more, you can say, efficient in that aspects and clearance of your products. So to just summarize it in a short, the compliance shouldn't be a separate workflows. It should be embedded in such a way that it would be just one item. So so MSME can be compliant by design, not by chance, so that they would have easy access to the global audience. Thanks.
So, Rajiv, follow on that, it seems it's quite complicated, it's quite transitional in nature, and it's ever-changing, right? So how can one stay updated with these ever-changing regulations and compliance?
Yes, I think this is a very pressing issue. As you said, it's ever-changing. So when we talk about domestically, we are dealing with one jurisdictions. The moment you go for export and import, you would be dealing with multiple jurisdictions. And every jurisdiction has their own pace of changing of their regulations. So dealing, and that too coupled with current geopolitical scenario, especially around the trade, it's going to be extremely, extremely tough. And it's just like a moving goal for the exporter to stay updated and being compliant. In that scenario, I would say for ecosystem player like a fintech, banks, trade organization, they need to play a greater role in terms of shifting manual monitoring to more of a automated intelligence. When I say automated intelligence, these digital platforms should integrate more with the domestic bodies and international bodies, and they would provide actionable insight which on the transactional level. So instead of MSME going through tons of paperwork and PDFs and just scanning those documents, again, this is not their forte. So we can just give a easy language, actionable, like I said, actionable points on a transactional level. Secondly, more and more collaboration, where all those ecosystem players act as a breeze and provide them in all those detail in a vernacular languages so that MSME get right signal at right point of time and helping them staying compliant uh, and it will turn compliance more into an enabler of trust in those MSMEs. Thanks.
Thanks, Raji, for that. So, building on that keyword, the intelligence or the automation or monitoring on the data part, Hitesh, according to you, what key data points and KPI should the MSMEs track to ensure compliance and build credibility in the global markets?
So again, looking from a biased lens, we say that it's important to demonstrate that you're a strong company, which means financial strength. That's a key criteria. And there are many third parties who would come validate and say that you are of good credit standing, you're a strong company with good credentials. I think that's one important part. The second is certification. If I am partnering with a company in their core processes, IP is important for them, cybersecurity is important for them, how are you managing your processes, have you standardized it is important for them. So how can I actually get those certification and compliances done? So that's the second pillar. Third is my credentials, right? And how am I servicing and who am I servicing today, which is my customers, the industry segments, how well entrenched I am. I think that part of having the credentials available and easily accessible becomes important, which are the case studies or the testimonials which have to be visible. So again, I'm a consultant, so always everything is three things. But so these are the three things which I would suggest. Yeah.
Yep, answered like a true consultant. Okay. So, Mrinalini, from an investor's point of view, when you, again, the similar question, what metrics or what data points should these MSMEs think about and optimize to capture the attention in a positive way?
Yeah, Rohan, I think biggest for any investor is obviously unit economics, right? So you have to show consistent margins, you have to show transparency in cash flow, retention in customers, right? So I think these would be key things just from a very basic business unit economics perspective we'd look at. But layered on top of that, right, I think digital readiness, right? So having the ability to do payments in multiple currencies, having compliance in place, having all of those basic factors so that scaling up is then just about capital. It's not about getting the infrastructure in place. So I think having that digital infrastructure will also be a critical aspect. Yeah.
Got it. Moving to a tactical question, Praachi. When you look at the operations of the cross-border payment movement, and I think Mrinalini also touched on that multi-currency flow and enabling that. As an operator in this space, what are the biggest barriers you see in enabling these flows for small exporters, and how can payment gateways solve them?
I think, look, at least showing the transactions in multiple currency is one of the biggest, challenge. While, there are for D2C companies, platforms like Shopify and all do simplify it from an overall perspective. But that is definitely a key thing where it is very hard for them to build because there is currency fluctuations that need to be kind of considered. It's not a one-time setup done, for ever perspective. For them, transparency in terms of currency conversion, what they are charging, what the payment gateway will convert and give it to them. Also, there is a lot of anxiety, right? With what comes with a cross-border payment is there is lack of transparency, the speed at which you will eventually get the money, right? Access to international payments in our market itself is a big thing. our market works on a basic thing of domestic by default and international by exception, right? So there are a lot of hurdles to be kind of crossed before they are actually ready to go global, right? So I think it's a lot of small problems to be solved before we can enable for them, right? And you have to be at it.
I think one of the points you mentioned on the cost part, I think that's a scary part too. When you look at cross-border payments, the anxiety that comes with the payment charges, especially the news that floats around that it's a very high cost or a high transaction charge business. So Satya, like, what do you think banks and digital platforms' role is in reducing transaction cost and imparting more transparency in this space?
So basically, MSME exporters should move away from costly instruments involving trade finance, which is basically letter of credits. They should do more open account trades. That is would one for reduce the costs. They should always hedge their receivables because in the current geopolitical scenarios, exporters are only tending to gain. That's point number one, with the rupee depreciating. So they, because they would be exporters, they would be receiving a higher value for their exports. This in turn, the margins which they will earn, even though the premium which they pay to the banks would be much lesser, they would earn an arbitrage. But this would help them in increasing their working capital requirements because this is basically a profit margin for them. Technologically, as Sir said, innovations are more required on the compliance part of it rather than the normal cross-border settlement. Why? Because compliance is something which is very, very fragmented right now. And banks have the onus to comply with the regulations and, of course, see that every money is accounted for. Now, that's where basically innovations and reducing, and let's say banks can also adopt a digital scorecard. Let's say because he has a running business and if he wants to avail export credit on a running account basis his past vintage, he can easily apply for it digitally through the bank's modem and he can get it at a cheaper cost. Plus there are of course government schemes as well, wherein when an exporter basically wants to avail export credit, earlier he used to get a subvention, but we are still exploring the needs of it. But there are government schemes also where the exporter tends to receive an arbitrage based on the subvention of cost interest as well. But they have to look at less costly instruments in doing trade. That's moving away from the general assessment. Thank you.
Thanks, Satya. I think that's a very practical advice for the people operating this space. For my final question, Gaurav, and as we spoke, my favorite question, uh, how can banks partner with fintechs and aggregator to offer a holistic export solution for MSMEs? How can we work together as an ecosystem here?
Sure. In fact, very topical question because 15 September, RBI came out with the payment aggregator guidelines, the master directions. So in one way, PACB is now formally recognized. There is clarity, including on compliances and various other things. And I think, again, kind of going back to the previous panel, I think banks bring about trust, capital, compliances to a large extent. Fintechs bring about access to market, they're aggregating. They are able to be very nimble and very agile on technology. They are able to capture data. And I think when the two co-create and co-bundle offers, that will create holistic end-to-end, cross-border ecosystem solutions. Just to give you an example, today MSMEs can, work to access global markets through fintechs, come to a bank, see live rates, do self-service hedging to kind of protect their interest. And I think that combination of the two working together will really kind of enable Indian MSMEs to create a bigger impact. If you look at it from a cross-border perspective, if I just look at e-com, India is less than 1% of the global trade. And I think with the regulations now coming in, clarity, already working, kind of a close um, um, collaboration between fintechs and banks, the India stack, UPI glowing global, kind of all ingredients there to grow MSME, grow exports, grow cross-border. So I think it's a next few years of the golden period, I think, for MSMEs. Yeah.
Great. Thanks a lot for that, Gaurav. With that, I'd like to conclude today's panel discussion. So I'd like to thank all the panelists for their expertise and, the insights that they brought to this forum. And, it makes me truly believe that the MSME markets, the export markets for MSME is truly, ripe for disruptions, supported by an ecosystem of, progressive fintechs, the bankers who are there anchoring the place, driven by insights and frameworks for robust compliance, and of course, capital that looks at the modern India. I feel we are, the ecosystem is truly ripe for a global revolution in India. Thank you so much.